Good morning, everyone. Thank you so much for joining us live this morning. On behalf of the Commissioner of Higher Education and our entire benefits team with OCHI, I would like to welcome you to annual enrollment for fiscal year 23. My name is Mary Lockenbrook, and I'm the Director of Benefits, and I'm here this morning to walk you through what you can expect through the annual enrollment process and any benefit changes that you might see as you start your enrollment. Our benefits period will run the fiscal year, which is July 1 through June 30 of 2023. So July 1 of 2022 through June 30 of 2023. For our time together this morning, we are going to walk through some self-funded plan information. We'll provide your annual enrollment dates. We'll talk about eligibility information and then walk through benefits for the medical plan, the prescription drug plan, dental benefit options, vision hardware, which is an optional benefit, our fiscal year 2023 plan rates, so that's our premiums, the dependent hardship premium waiver, our flexible spending accounts, our 2022 wellness programs. Remember, the wellness program runs on the calendar year where everything else runs on the benefit year, the fiscal year. We'll talk about our new wellness incentive program and then finally end with some enrollment reminders. To start us off today, and this is just a reminder for most of you, but I think it is important that we take a moment every year and pause and think about what it means to us to be a self-funded plan. Our benefits plans, medical, prescription drugs, dental, and vision hardware are all self-funded plans. And what that means, there's a couple of really basic meanings of this. First of all of our premium contributions go directly into a fund, which we use to pay the cost of benefits for all of our plan participants who may experience illness or injury throughout the plan year. But at their core, self-funded plans are a tax vehicle. And so that's why there are times when you will find that we don't have, as plan administrators, any flexibility. And it's because the tax vehicle that our plan is built around, so that's really the base or the core of it, is really regulated by some federal agencies, including the IRS, the Internal Revenue Service, the Department of Labor, or DOL, and HHS, or Health and Human Services. The tax benefit to all of us is that our premiums are paid on a pre-tax basis, and failure to comply with the regulatory agencies puts in jeopardy for the entire plan our pre-tax status. In order to keep our plan financially sound and affordable, it's important that all plan participants use their benefits responsibly. And so in order to do that, there are things that you as a plan participant can do, you and your family members, and it goes beyond the expectations that you pay a portion of your medical costs in the form of annual deductibles, percentage coinsurance, or flat dollar co-payments. But also there are cost containment features that are built into the plan design so that funds are available in the event that you or a family member covered under the plan has a high cost medical emergency or a catastrophic illness. So there are ways that you can work to help us out, and that means that you can be educated, ask questions, contact our vendors if you have questions about claims, or contact our office if you need assistance with navigation. Make sure that you're utilizing in-network providers, because that makes a big difference both to you and to the plan. So we ask, because we are self-funded and we're all paying for one another, that you do your part to help us out as well. So to start off with, our annual enrollment period will kick off next Monday, April 25th, and it will end on Friday, May 13th. So that is the time frame that you have to go in and make any benefits elections that you would like to make. There are some limits on the changes that you can make. And if you don't want to make any changes, you don't have to go into the system to update anything. We do ask that you take a look. It's always a good idea once a year to go in and just refresh yourself on the benefits elections that you have, the dependents that you may have covered. And I always ask folks to take a good look and ensure that you have beneficiaries for your life insurance and for your accidental death and dismemberment if you have that as well. Beneficiaries are really, really important, and none of us think that anything is going to happen to us. We certainly hope that it doesn't to us or to any of you throughout the upcoming fiscal year. But in the event that it does, it's really important that you have your beneficiaries identified and to keep in mind that it's always a good idea to have a primary and a contingent beneficiary in the event that you and your primary beneficiary should pass at the same time. So that's particularly important. Let's say if you have your spouse listed as your beneficiary, you can have that at 100%, but then list a contingent beneficiary in the event that that person were to pass with you or prior to you. So let's start off talking about eligibility information for fiscal year 23. For those of you who have been on the plan for a period of time, there really are not changes from last fiscal year. Dependent children up to age 26 may be enrolled in medical, dental, and/or vision hardware benefits during this annual enrollment period. Please keep in mind that the university system continues to have a closed enrollment for your legal spouse for medical and dental coverage. If you do not have your spouse on the plan today for medical or dental, you may not add your spouse during annual enrollment. You would need to wait for a qualifying event, and keep in mind you have 63 days from the date of a qualifying event. Some examples of qualifying events would be marriage, birth of a child, or placement for adoption, or if your spouse were to lose eligibility for his or her own coverage. Proof of eligibility will be required for all new dependent children added to the plan for a July 1, 2022 effective date. A mid-year enrollment or disenrollment may only occur with a qualifying event or during a special enrollment period, and we've already outlined what those types of events include. Let's talk for a few moments about our medical plan benefits. There is no change to the majority of your benefits this year. There are two caveats that we will talk about, but our benefits remain intact and there's no change to your copays, to your deductible, to your out-of-pocket maximum. The only exception has to do with psychiatric visits. They will now have the $25 copay rather than the $40 specialty office copay. Then we are adding a benefit to the plan this year, and that is a hearing aid benefit. The pediatric hearing aid benefit is actually statutorily required, and that is for plan members 18 years of age or younger. They will have one hearing aid allowed every 3 years, subject to deductible and coinsurance, and that's one per ear every 3 years. Our Inter-Unit Benefits Committee and the Commissioner have also agreed to add an adult hearing aid benefit to our plan this year. So beginning July 1 of 2022, all plan members on the medical plan age 19 or older will have a benefit of $2,000 per ear per lifetime. And these benefits are subject to the deductible and coinsurance. We're excited to add this. This is a benefit that we've heard a lot of requests for over the last, I would say, 5 years. We've had different people reach out and just say that they really felt like there would be value to this benefit. And we were in a place this year where we were able to add that. So you can look forward to that being available July 1. One other comment I would make about your medical plan benefits is just to remind you to utilize in-network providers. And if you're in a situation where you can't find an in-network provider, reach out to our office. We can help you with navigation. Blue Cross Blue Shield can also help you navigate that. But you really do want to be using in-network providers, even though there is a benefit for out-of-network. It is substantially more costly. So it's advantageous to you and to the plan when you utilize in-network providers. We wanted to outline just a few of the things that Blue Cross Blue Shield has available with regard to the medical plan and your opportunities for choosing quality care for yourself or your family. And we always encourage our members not only to utilize in-network providers, but if you have a need for some of these specialized types of care, we would highly recommend that you seek out a Blue Distinction specialty care provider. These include centers that are available for bariatric surgery, cardiac care, knee and hip replacement, maternity care, spine surgery, and transplant centers. If you have questions about the Blue Distinction Centers, I would encourage you to either reach out to Blue Cross Blue Shield or to our office here in Helena. Just a brief recap of the prescription drug plan. We will continue to partner with Navitus as our pharmacy drug benefit manager and Lumicera as our specialty pharmacy. Keep in mind that all of our pharmacies around the state are in network with the exception of the CVS Target pharmacies and the Western Drug Pharmacy in Bozeman. Those pharmacies are not participating, and if you choose to use those pharmacies, you will be responsible for all charges. Keep in mind, we added this benefit several years ago that allows you to fill either a 34-day supply or a 90-day supply at participating retail pharmacies. This has been a benefit that many of you have reached out and let us know you've really appreciated. It allows you to get your maintenance medications, a 90-day supply at your retail pharmacy. In addition, we do still have mail order prescription options for 90-day supplies. Those can be filled at Ridgeway, Costco, or MyRx. Remember that MyRx has limited distribution. They only deliver to Montana, Idaho, Washington, Wyoming, and North and South Dakota. There is no change to the prescription drug plan in terms of copays this year. So there is still the tier $0, tier 1 at a $15 for a 1-month supply or a $30 copay for a 3-month supply. Tier 2, $50 for a 1-month supply or $100 for a 90-day supply. And then tier 3 is a 50% coinsurance. The 50% coinsurance does not apply to your out-of-pocket. And then there's the tier 4, which is specialty, and that is a $200 copay if you utilize our in-network specialty pharmacy, which is Lumicera. There are a few exceptions for some specialty drugs that are only available at specific pharmacies. And then there is 50% coinsurance if you choose to get specialty medications at a retail pharmacy. And again, the coinsurance will not apply to the out-of-pocket maximum. The out-of-pocket maximum for fiscal year 23 remains at $2,150 per individual or $4,300 per family. One change that we have made, and we actually made this change effective April 1 of 2022. The reason that we made it effective April 1 is because this change is not a material change, so there isn't a requirement for a material modification notice. It is something that if you have a drug that qualifies for this program, it's a benefit to you and it's also a benefit to the plan. And because of that win-win, we are taking advantage of the opportunity to make this effective April 1, 2022, and that is the Copay Max Plus program. You may recall July 1 of 2021, we implemented the Navitus Copay Max program. And the difference between the Copay Max and the Copay Plus program in a nutshell is that the Copay Max Plus program includes many more drugs than the Copay Max program. So what this is in essence is a copay assistance program that manages expenses for eligible medications that have a manufacturer-funded copay assistance program available. So it lowers both your costs and the plan's overall costs. Under this program, the amount that you pay for your eligible medications may be set to the maximum of the current university system formulary benefit tier, $0, or the amount specified by the manufacturer-funded copay assistance program. In my experience, these copays tend to run anywhere between $0 and $15. I've seen $5 copays, $10 copays, $15 copays that are set by the manufacturer. And so what you would see is that instead of your $50 copay, you might see a $0, $5, $10, or $15 copay. And on the other side of the equation, there is a reduction in the amount that the plan pays because the pharmacy manufacturer is picking up a portion of the expense. To take advantage of the pricing, you will be required to remain enrolled in Navitus for obtaining manufacturer assistance, including copay assistance. The amounts paid by manufacturers on your behalf do not count toward your annual out-of-pocket maximum. So what that means for you is that what applies to your out-of-pocket maximum is the actual copay that you pay. So if your copay is $5, that's what will apply to your out-of-pocket maximum. Once the manufacturer-funded copay assistance is exhausted, the amount you pay will be no more than the regular Montana University System tiered copay. And if a specialty medication does not qualify or is removed from the copay assistance program, the copay then defaults back to the medication on the tier that it lands on the university system formulary. If you currently have a prescription drug that qualifies for the Copay Max Plus program, you should have received a letter from Navitus in the mail explaining that you are eligible for the program and indicating which of your prescription drugs is covered under this program. The list is really not available to us because the drugs change. Sometimes manufacturers will end their copay assistance programs. There might be a set amount of funding or other requirements, or they may just choose to end it. Other times there will be another drug, perhaps a generic becomes available, and they will end their manufacturer assistance for that reason. And then just a reminder about the Sempre Health Discount Program. We talked about this last year. It was added last year. And this is an SMS or a short message service, most of us call it text messaging program, that is designed to help with adherence and affordability for chronic disease medications by lowering copays when members fill their prescriptions consistently and on time. So really the intent behind this program is to increase the compliance of these particular medications. It is a very small group of drugs at this time. They're listed on the lower right-hand side of the screen. We do hope that Navitus will be able to add other prescription drugs to this program, but it is limited at this time. The way that this program works is if you choose to enroll and you're on one of those 6 drugs, then you will have reminders sent to you via text message reminding you to fill your prescription on time. And when you do that over a period of time, your copays will begin to decrease. And on the flip side, if your adherence or your fills start to become inconsistent or not on time, then your copay will default back to the regular benefit copay for whatever tier your prescription drug falls into. So with that, we'll move from the prescription drug benefit to our Choices Dental Plan benefits. We will continue to offer both the basic and select dental plans for fiscal year 23. No plan design changes at all. We are doing another step toward increasing the fee schedule reimbursement. So you may see some of the maximums for your dental codes are increasing, but there is no increase to your premiums. Your premiums for your dental plans will remain flat. Again, the basic plan is for diagnostic and preventive services only and has a $750 annual maximum per covered member. The select plan is a comprehensive dental plan. It covers diagnostic and preventive, basic, major restorative, and also has a limited $1,500 lifetime maximum for orthodontist services. The maximum on the Select plan is $2,000 per plan year per covered member. But remember, we have the diagnostic preventive waiver on the Select plan. So your diagnostic and preventive services do not apply to that $2,000 annual maximum. So what that means is if you do have a year where you need some extensive dental work, maybe you need a root canal and a couple of crowns, and you max out that $2,000, you still can go and get your annual exam and your cleaning, because those do not apply to that $2,000 maximum. The vision hardware benefit, again, this is an optional benefit in fiscal year 23 as it is today, and it will continue to be administered by Blue Cross Blue Shield of Montana. This benefit provides a $300 annual allowance per covered member for eyeglasses and frames in lieu of contact lenses. This is for one purchase per plan year. Or you may get contacts in lieu of frames and lenses, again, one purchase, up to a $200 annual allowance per covered member. Please keep in mind that your eye exam, whether it's routine or medical, is provided as part of your medical plan, one per plan year at $0 copay when you receive your eye exam from an in-network provider. So now on to some good news. I think I speak on behalf of both the commissioner and our inter-unit benefits committee, and all of those people are incredibly engaged in helping us here on the benefits team ensure that we continue to provide high quality, low cost as possible benefits that really add value to you and your family. And I think that I can speak on behalf of all of us when I say we're incredibly proud to be able to tell you that we will enter year 5 on July 1 of 2022 of no premium increases. So the premiums that you pay today are the premiums that you will pay for fiscal year 23, which begins on July 1 of 2022. Of course, your rates vary based on what plans you are enrolled in and whether or not you cover dependents. But if you make no changes to your benefits, you will see no premium changes for fiscal year 23. I really want to focus a little bit of time and attention to flexible spending accounts. This is a benefit that I have a bit of angst about because I am concerned that our plan participants may experience some confusion with regard to this benefit simply because there was a flurry of activity at the federal level during the pandemic, and we saw some unprecedented changes to both health and dependent care flexible spending accounts during the pandemic. So for those of you who are ongoing employees with us, if you have historically had medical flexible spending accounts or dependent care or daycare flexible spending accounts, you would know that the last plan year, you were allowed to roll over all of your funds into fiscal year 22. For fiscal year 23, the IRS is returning to the regular flexible spending account rules. And so what that means is you will not have any rollover for dependent care, and you will have limited rollover on medical flexible spending accounts. And we'll talk about that in a little bit more detail, but I really just want to emphasize that we are returning to the pre-pandemic rules for flexible spending accounts. Just a reminder, if you're not familiar with flexible spending accounts, this is another tax vehicle. It's an optional reimbursement account that allows you to set aside a portion of your earnings on a pre-tax basis in equal installments throughout the plan year via payroll deduction to pay for qualified out-of-pocket expenses for healthcare or dependent care, depending on which elections you make. Your flexible spending account funds may only be used for expenses incurred on or after your flexible spending account effective date. We'll talk a little bit later about how the rollover amount for medical plans impacts this, but you may not use your fiscal year 23 elections to pay for services that you received in fiscal year 22. You must re-enroll each plan year to participate in a flexible spending account and to continue contributions. No exceptions can be made for late enrollment. So please, 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 if you want a flexible spending account, you need to log into the Benefit Solver platform and make your election no later than May 13th. Keep in mind, like all benefits elections, these are irrevocable elections. That means that after you make your enrollment, you cannot make changes. We do ask that you look at your first paycheck after July 1st, so after the fiscal year begins, to identify any errors that you may notice. I would say back it up one step and really take a close look at your summary after you make your benefits elections on the Benefit Solver platform, but then always check your first paycheck in July to make sure that there is not an error. This is particularly important for people who maybe elected dependent care in error and they meant to elect a health care flexible spending account. Or if there is just an error in general, you need to notify your Human Resources payroll office right away with that first paycheck in July. This does not mean you can make changes to your elections. It means if there is an error, we need to be notified of that. No changes at all will be made to flexible spending account elections after a new hire's first paycheck or the first paycheck after a qualifying event. So if you have an election, you need to check and make sure that it's been made and that the contribution is showing on your first paycheck that you receive. So healthcare flexible spending accounts, for a healthcare flexible spending account, this is for eligible expenses for yourself or a dependent that may or may not be on your health plan. If you have, for instance, eligible children, but they're not covered on your health plan, you could still submit their out-of-pocket expenses, so deductibles, copays, coinsurance, to your flexible spending account for reimbursement. We did provide you here with the link if you're interested in a complete list of eligible expenses, but I will remind you that during the pandemic, one of the changes that was made to medical flexible spending accounts is that you can submit over-the-counter expenses, and that has continued. So you may continue to submit your over-the-counter medical expenses. That would be like your allergy meds or your Tylenol or those types of things that you can purchase over the counter. And just a reminder that if you or your spouse are enrolled in a high deductible health plan with a health savings account, you are not eligible to elect the Montana University System General Purpose Healthcare Flexible Spending Account. This is a rule that comes into play with high deductible health plans. So it is the high deductible health plan with the savings account that creates the tax issue for you or your spouse if you have a health savings account and then you were to enroll in our flexible spending account. So just know that it's not the flexible spending account that is an issue, it's your health savings account and then the election of the FSA. If you or your spouse have a health savings account, you could still elect the limited purpose flexible spending account that is for dental and vision expenses only. These guidelines are the same as a regular healthcare flexible spending account, with the exception of the fact that the only eligible expenses would be dental and vision. So dental exams, dentures, contacts, eyeglasses, prescription lenses of any sort. So just limited to those things, not medical. And that's because you would have the health savings account available for medical. The minimum amount that you can contribute to a flexible spending account for fiscal year 23 is the same as it is for fiscal year 22 in terms of the minimum, which is $120. The maximum, the feds did increase that this year up to $2,850. Now, some reminders about the technicalities for rollover. If you do not enroll in a healthcare flexible spending account for fiscal year 2023, and you have unused flexible spending account funds in the amount of $50 or less that are not, you do not have services received by June 30 of 2023, your flexible spending account will be closed and your funds will be forfeited. If you have a balance greater than $50, up to $570 of that will be rolled over to the current fiscal year, so to fiscal year 23. A reminder that if you are new to a healthcare flexible spending account or a limited purpose flexible spending account, you will automatically receive a healthcare debit card at no cost to you. Just a reminder to you that that debit card must be used for services that you receive July 1 or later. You cannot use that debit card to pay for out-of-pocket expenses for services that you received during the prior fiscal year. Another reminder about the healthcare debit cards. Auto adjudication happens for your medical copays. So if you go to the doctor and you pay your $25 copay with your healthcare debit card, that will auto adjudicate. But just a reminder that the IRS does require documentation for most services that you receive, that you pay for with your healthcare debit card. So don't be alarmed if you use it to pay a bill of $233 at your doctor's office. WageWorks will ask you for documentation, and you do need to submit that documentation in order for that expense to be cleared. You have other reimbursement options besides the healthcare debit card. You can get a pay me back claim or a pay my provider. And if you're doing a pay me back claim, you can get that through a check or you can get that through direct deposit. If you want direct deposit, you do need to go out to the website and set that up. If you have flexible spending account funds in your healthcare account that you need to spend before the end of the year, there is a flexible spending account store that you can access through WageWorks, and you can use your healthcare card to order and pay for those items online if you choose to do so. Dependent care flexible spending accounts. These accounts seem to confuse people, and we've tried a number of different ways to draw attention to the fact that dependent care does not mean medical out-of-pocket expenses. Dependent care is in essence a daycare flexible spending account, although it can be used for elder care in certain circumstances as well. So it's not strictly daycare. It is not for healthcare out-of-pocket expenses. The dependent care flexible spending account is used for eligible items for dependent care or daycare. So that could include live-in care, babysitters, licensed daycare. It can be some elder care as well. So if you have questions about this, you can reach out to HR, to our office, or to WageWorks. But please understand, if you elect a dependent care flexible spending account, it is not for reimbursement of out-of-pocket healthcare expenses for anyone. Again, the minimum for fiscal year 22 is $120, and the maximum contribution is $5,000. These do not have the option for a debit card, so your options for reimbursement are either direct deposit or pay me back or pay my provider. So to talk a little bit more in depth about rollover funds, just keep in mind that you will not have any rollover of dependent care from fiscal year 22 to fiscal year 23. And we are back to the regular use it or lose it rules for medical flexible spending accounts as well. So the IRS allows a limited rollover of unused healthcare flexible spending account contributions from 1 year to the next. It has been increased to $570 this year. So up to $570 can roll from fiscal year 22 to fiscal year 23. but back to the regular use it or lose it rules that are outlined by the Internal Revenue Service. Any amounts that you have in a healthcare flexible spending account in excess of $570 that you do not have services incurred by the end of the plan year, which is June 30 of 2022, will be forfeited. So for fiscal year 23, again, you're not allowed to roll over unlimited funds. $570 can roll, and your unused dependent care contributions cannot be rolled over at all. Just a reminder that, again, flexible spending accounts require an active election, which means that you do need to log into the Benefit Solver platform and elect a flexible spending account if you want to contribute for fiscal year 23. If you do not enroll for fiscal year 23 and you have healthcare flexible spending account funds in excess of $50, any amount between $50 and $570 will be rolled over, but anything less than $50 or more than $570 will be forfeited. And then just a reminder, your services must be incurred by June 30 of 2022 and to WageWorks by September 30 of 2022 for the current fiscal year. And for fiscal year 23, it will be the same rules. Expenses incurred by June 30 of 23 and all claims submitted to WageWorks no later than September 30 of 2023 for reimbursement. And that is a received date. It is not a submission date. You can't drop them in the mail on September 30th. And then just a reminder that Health Equity and WageWorks does have a mobile app. It has, it's an easy receipt app, which allows you to check your balances, submit your claims, take photos of your receipts, and manage your account basically from anywhere. So you can do it on the go. You can file your claims, view your transactions. You can get notifications pushed from the app. You also can sign up for email and text alerts so that you can stay on top of your account. If you're like me, I sign up for all of them because the more notifications I can get, the better. And this is particularly important if perhaps WageWorks is asking you for documentation. You are going to want to be made aware of that so that you can submit that and ensure that your expense, your reimbursement is cleared through the account. So with that, we're going to change directions a little bit and just provide you with a reminder that we are continuing our dependent premium hardship waiver. This is something that is pretty unique. There aren't many, if any, others that offer this type of a premium waiver. This is an effort to ensure that there are opportunities for all to have their children covered on a medical plan. The dependent premium hardship waiver provides assistance to families who have financial hardships with the cost of medical health care coverage for their children between the ages of 0 and 26 who are covered on the university system medical plan. The family must first apply for Healthy Montana Kids for any children under the age of 19. And then if they are denied based on finances, because perhaps they make a little bit too much, then the dependent premium hardship waiver can be completed and submitted to our benefits office here in the commissioner's office. And if the total household income is not more than 125% of the Healthy Montana Kids guidelines, then the waiver can be received for the dependents for their medical coverage. A new application must be completed each plan year. So if you have the waiver for fiscal year 22, you do need to complete the application for fiscal year 23. Then a few wellness program highlights. And remember, this is a 2022 calendar year. It's our one idiosyncrasy in our benefits programs because it does run on a calendar year. We will continue to offer the live recordings, the live programs and recordings for fitness and nutrition. We'll continue to have the Montana Moves and Meals blogs. We continue to have our Well Baby program and our employee assistance program. We still have our Take Control Lifestyle and Disease Management program. We are continuing with Wonder Health, Hinge Health. You still have your access to the Well on Target website through Blue Cross Blue Shield and the Blue 365 discount program. And there's also the Amplifon and QualSite programs available through Delta Dental. And then we wanted to introduce you to our new wellness incentive program. This kicked off on April 4th. Our team is really excited to have this up and running. A number of people have done a lot of work. I would shout out to particularly Neil Andrews, Kelsey Hartzheim, Kelly Shields, and Amy Berry have really worked to get this platform up and running for all of you. So we hope that you will log in and take advantage of this incentive program. Our Well Baby program will continue with the same eligibility requirements. Remember, like all of our programs, this is a voluntary confidential program. The benefits begin the day the participant enrolls. And if you enroll during the first trimester, all benefits of the program, including the copay waivers, are available. If you enroll during the second or third trimesters, you receive all of the benefits except the copay waivers. A reminder about our employee assistance program. This was formerly Reliant Behavioral Health. It is now called Uprise Health. And there are confidential free services available to you and your family members, your household members. So if you have a crisis or you need some kind of assistance, there is an opportunity for in-person counseling. There are still offerings for telehealth counseling. You can receive up to 4 sessions per issue at no cost to you. And there is also some e-access available. Keep in mind, this is available to all employees, dependents, and household members, whether or not they're covered on the health plan. The EAP, we encourage you to check out their website. There are a number of other work-life services available. They include webinars, newsletters, wellness resources, some courses, articles, financial calculators, legal resources, stress tools, retirement planning resources, some child and elder care locators, and some lunch and learn webinars. A reminder that we will continue with Take Control as our lifestyle and disease management program. This is another voluntary confidential program that provides education and support using a telephonic delivery method, and it allows you to participate from anywhere and receive individual attention specific to your own needs. It's a 12-month program that includes one-on-one monthly health coaching with licensed dietitians, exercise and sports science trainers, and certified diabetes educators. There are some criteria for enrolling in the program, but it is available for a number of conditions, including high blood pressure, high cholesterol, weight loss, diabetes or prediabetes, tobacco cessation, and there is a maternity program as well. We are going to continue with the Wonder Health program. It started last July 1st as Naturally Slim. This is offered through our contract with Blue Cross Blue Shield of Montana. This is a weight management metabolic syndrome reversal program that offers counseling and personalized skill building, and it is available at no cost to plan participants over the age of 18. We are also going to continue offering the Hinge Health Musculoskeletal Management Program, and this is available again at no cost to you as plan members. It's available to all plan members over the age of 18. It is a 12-week program. It starts with providing you with a tablet and wearable sensors. You receive health coaching and personalized exercise therapy. This is a remotely delivered program, and it does include some wearable technology. You will continue to have access to the Well on Target portal through Blue Cross Blue Shield of Montana. We've provided you with some information on how to log in, and I would really encourage you to go and check this out. You can do things like answer questionnaires. There are some different wellness activities, some resources there. And if you attach your device, your wearable device, you will earn ongoing points, and there is an ability to cash those points in for prizes. Just a few of the perks of the Well on Target member portal. Again, I already said you can do your health assessment. You can do some different activities designed around wellness and track and monitor your fitness and nutrition. The Member 365 member discount program is offered through Blue Cross Blue Shield. It includes apparel and footwear, fitness, hearing and vision, home and family items, nutrition items, and personal care items. So I would encourage you to log on and take a look at what you might be eligible for in terms of discounts through this program. And then again, we let you know last year, but Delta Dental continues to offer both the Amplifon and the QualSight savings programs. These offer you discounts on LASIK eye surgery and Amplifon hearing aids. Just a little outline of kind of what is offered here: your hearing aids, your follow-up care, your LASIK surgery, your pre and post-op visits. And it offers you anywhere from a 40 to about a 62% savings, depending on the provider and the services that you receive. Okay, big news is our Wellness Incentive Program for 2022 that launched on April 4th. If you have not yet logged on, I would encourage you to do so. And I thought I'd start here with just a little bit of information about Virgin Pulse. Virgin Pulse is the provider, the business entity that was successful in our request for proposal. We had Limeade for 7 years, and we are required to go out every 7 years to the market with a request for proposal. And Virgin Pulse is the company that successfully won the bid. The name Virgin, you're probably familiar. You've probably seen or heard the Virgin name on a number of different business entities, but it began in 1970 when Richard Branson and Nick Powell formed a record shop. And it started out as a mail order record shop. And then in 1971, they opened a physical store, and they considered themselves virgins in business. And that is where the Virgin name came from. And Branson has described the V in the logo as an expressive tick. This program is open to all university system employees and their legal spouses who are enrolled in the Choices Medical Plan. You can earn rewards points by participating in challenges and then redeeming your Pulse Cash for items in the Virgin Pulse store. And then we've given you the website where you can log in if you'd like to join the program. Virgin Pulse, in a nutshell, offers more than just rewards. I already told you that the Virgin name is on a number of businesses. It's a global well-being company. Virgin Pulse is. It's a part of the Virgin family under that Virgin umbrella, but it's a global well-being company that supports more than 4,000 organizations in 21 languages across 190 countries. So Virgin Pulse is a big company, and they provide some really unique items with regard to wellness platforms. So I think you'll see some things that are a little bit different and a little bit exciting. One of the things that people have expressed to us that they enjoy is the ability to build their own teams, to start their own challenges, and to invite people from outside the company to join in our challenges. So you can invite, if you say have a friend who's not on our health plan, you can invite them to join. They can participate in the challenges. They just don't receive any rewards points. And then Kelly did a great job pulling this together just so you could have a visual of some of the different businesses that are under the Virgin umbrella. So Virgin Pulse is the wellness section of the company, but you're probably familiar with things like Virgin Hotels and Virgin Airlines, but there are many businesses under this umbrella. Okay, just a reminder, you will enroll in the BEBA system, the Benefits Enrollment Benefits Administration System. It continues to be the Benefit Solver platform. That is where you go during this annual enrollment period, as well as if you have any mid-year changes due to a qualifying event. And just remember that when you make a mid-year change, it does require approval. So we do have to, your HR staff or our staff here in the commissioner's office need to make sure that you meet the requirements to be able to make the change that you're requesting and that you have provided the documentation. And this system stores all of the historical enrollment and benefit election information. And then just a reminder that there is a Benefit Solver My Choice mobile app if you want to be able to have it with you on the go. This is a picture of our website here at the Commissioner's Office. So when you get to the Choices website, you can see where you can click if you want to start your enrollment process. You can also log in if you're on the University of Montana or the Montana State University campus. You can click for the single sign-on login as well. And then this is just a photo of what your welcome screen will look like. You'll be asked to enter your username and your password or to register if you're a first-time user in the system. Once you're in the system, the home screen will remind you that enrollment ends on May 13th, and it will tell you as we tick down the days how many days you have left for your enrollment. It will also give you reminders that action is required. So if you go in and start your enrollment, for instance, and then you have to run to do something else, you have another task at hand, and you don't finish, you will have a reminder that there is action required. This will also notify you if you need to provide documentation. So a quick reminder that our enrollment will run from next Monday, April 25th through Friday, May 13th. We will be posting this benefits presentation and slides online next week by Wednesday, April 27th. Your enrollment workbook has already been posted online, so it is available to you. And there will be an accessible version for ADA accessibility online next week as well. Quick reminder that we are a closed enrollment plan for a spouse. You may not add your spouse during annual enrollment, but you may add your children up to age 26. If you do not submit any changes, you will automatically remain enrolled in the prior year's elections, so your current elections, with the exception of your flexible spending accounts. You must actively elect your flexible spending accounts. And then just a quick reminder, we talked about this earlier, but we can never give you enough reminders that you want to use in-network providers on your medical plan. We do have a different benefit on the dental plan, and we actually have a fee schedule maximum, but you still have the opportunity to perhaps save money if you are able to find a Delta Dental PPO or Premier Network provider. So we do give you that information, but just a reminder that it is not a requirement. You don't have a different in-network or out-of-network benefit for dental, but you do for your medical. So you want to ensure that your medical providers are in network. And with that, we will open it up to whatever questions you have for us. If you think of something after the fact, then you can reach out to us at any time or contact your Human Resources office as well. We are always happy to assist. Thank you all.